Well, currently global markets are led by three factors. One is, of course, developments in Ukraine. Second is red hot inflation. And third is adjacent to that red hot inflation is central bank responses to this inflation. And when we look at how markets are doing globally, there is a little bit of commentary by the Fed around the fact that there is going to be more interest rate hikes. They will be aggressive on that front, and they'll also be tapering down on that large balance sheet that they've created over the last couple of years or so, and that meant that markets are trending lower. In fact, stocks have fallen, and currently broadly the entire focus of global markets is on the Fed minutes release, which is expected to happen Wednesday US time, and Fed Governor Brennard has also indicated support for higher interest rates and smaller balance sheets. Of course, there are no further sanctions that have come through, which was what broadly was the expectation yesterday, on the back of which oil prices went higher. But that has led to oil prices actually retreating a little bit. So there's some relief there. And when we look at the Dow, it's fallen around 0.4% on Wednesday. The S&P 500 is down around 1.25%, pretty much erasing those gains made on Tuesday. And the Nasdaq is down around 2.33%, which also means that it's pretty much erased the entire gain made on Tuesday. And tech stocks are leading the fall already this Wednesday morning. When we look at Europe, well, European markets were mixed largely, with the FTSE in the green, the Stock 600 in the green marginally as well. But the DAX and the CAC 40 were both lower, with the DAX down around 0.2% and the CAC 40 down around 1.25% or so in trade. When we look at how Asian indices fared yesterday, there was a bit of positivity amongst Asian indices yesterday, but when we look at it, how Asian indices have opened today morning, well, pretty much a sea of red as we see it at the moment. The Nikkei is in fact down almost 2% in early trade. The Shanghai too down around 0.2%. The Hang Seng down 2%. The ASX 200 down around 0.4%, and the Kospi down around 0.9%. So pretty much all indices in the red. The SGX Nifty too is trending lower, around 1% down, well below that 19,000 mark. 18,000 mark, as we speak at the moment. So clearly negative cues coming out of that. When we quickly move to commodities, well, oil prices, as I did say, are retreating. They're close to that $102 a barrel mark, down around 0.25% in early trade today, but dropping off a couple of percentage points yesterday as well. Gold too is on the retreat as Treasury yields come back into focus. Well, gold is at around $1,926 an ounce in early trade today. Bond yields, of course, Treasury yields in focus. I did mention that bond yields are at 2.6%, and the US dollar is gaining strongly. In fact, the dollar index is closing in on that 100 mark. It's at around 99.5 at the moment. So clearly signs of positivity for the dollar, for bond yields going up as well. When we look at Bitcoin, of course, as bond yields go up, Bitcoin will lose some of its charm. It's down to around $45,000 in early trade today. Largely negative cues across the board as we see it.